Hey guys, welcome back to my channel. If you're new here, my name is Jess. I've been trading a little over 5 years now. I started in the Forex market and now I strictly trade the futures market, NQ and YM primarily. That is NASDAQ and Dow Jones for those of you who do not know. And I'm going to be dropping everything I've ever learned and starting from the very, very basics all the way into more advanced. So if you are looking to get into trading the futures market, make sure you like and subscribe to my channel because we're going to be going over everything like I just mentioned. So with that being said, let's get into how to trade the futures market. Again, this is for very beginners. So this is understanding contracts, point values, and risk management. So this is going to be very high level. If you guys have questions that I am not going to go over in this video, feel free to leave it down in the comments, and then I will continue to make videos like this explaining any of the questions you guys might have. So when we talk about what is day trading futures. Key word here, day trading. So if you guys are familiar with the terminology of day trading, swing trading, scalpers, we are day traders. We could constitute as scalpers as well, depending on volatility in the market that particular day. But for the purpose of this video, we're going to go over day trading. So it means that you are buying and selling contracts within the same day to get a profit short term. So a lot of people who don't know too much about day trading futures, you can take positions on the buy side and the sell side and make profits from it. So if the market is going up, you can buy a position while it's going up, and that would mean it is a long position. A lot of times new traders, the terminology long and short. So long is going up. If you wanted to take a sell position, if you see that the market is going down, you can click sell. That is a short position and you can make money on the downside. So that's a nice thing about trading futures. You have the option to make money on both sides of the market. So you're not going to be holding positions overnight or for extended periods of time because this is day trading. So why trade futures? One, they're highly liquid, meaning you can get in and out with short-term losses and short-term gains. Very great. I really like that idea that it's high liquidity. The leverage, you can control large contracts with a small margin. We'll get into this more in the later videos. And then the next best thing, it is open nearly 24 hours. So a 24 market access to trading NQ is amazing. There is obviously opportunities in the indices, the commodities, currencies, and bonds, and we'll get into that. So, key future contracts. A lot of people like to trade ES, which is the S&P 500, NASDAQ, that is me, and the Dow Jones, which is YM. So, commodities, a lot of people, we do inside my group look at crude oil sometimes. We do look at gold. As far as currencies and bonds, we don't trade a lot of those, but you do have the option to trade those as well. And then micro contracts are available for those same indices. So if you wanted to trade the micro contracts of ES, that's available, or NQ or YM. They are a little bit different ticker symbol. They will be MES, MNQ, or MYM, signifying that they are a micro contract, which is less cost, and we'll get into that too. So when we're looking at this, when you're taking a trade and you look at point values, you always have to remember that for every point, there are 4 ticks that live inside that one point. So a lot of people, when they're speaking, if you've watched any other videos, you may hear people say, I took like a 200 tick move, which sounds large, but in reality, there's 4 ticks inside of a point. So you could take a 1 point move and make $50. Obviously, we're shooting for more than 1 point, but you get the idea. Same thing, E-mini. So this is where we were saying MES for the micros. You can see the cost difference. $50 per point as opposed to $5 per point. So this is not opening you up to as much risk. It really depends on where you're at with your trading journey, as opposed to trading a large full size, a regular ES contract, or an MES. NQ on the other side is $20 per point for a full size contract, and then $2 per point for an MNQ contract, and then so on and so forth as we go down. There's other options as well. Gold is not on this slide, but if you guys would like me to do a full breakdown of everything, as always, leave it in the comments. So let's go to this next slide. This is an example of what you could do if you were trading one full-size ES contract. So if ES moves 10 points in your favor, you could potentially make $500. Again, though, if it moves against you and you are incorrect in the trade you might have taken, you could potentially lose $500. Right? And we just discussed that micro contracts, smaller risk, right? But you still get the reward. There's still money being made. So don't get a negative mindset around that. A lot of people will jump into the futures market and look for the biggest reward possible without the right set of tools to get there. And we will be going over that as well. So, your risk management. A lot of people will tell you to risk 1 to 2% of your account per trade, and then position sizing is, I should have said crucial. It says critical, but it's crucial to understand your position sizing, especially when working with either one, smaller accounts, prop firm accounts that have a limited drawdown. We'll get into those in other videos, but this is just high level kind of what things you need to looking at, and be prepared to study up on if you're just brand new to the futures market. Using a stop loss. This is crucial also to keeping your account and protecting your capital. And then focus on consistency and not the huge wins. It is hard because social media has skewed the idea of what trading could be, with people throwing up very, very large numbers. I don't think it's impossible, but I think people just starting out kind of see those big flashy numbers and think this is a get rich quick. This is not a get rich quick. This is a very calculated, disciplined, consistent way to earn money. And if you can become those three things, then you will do great. If you are somebody who cannot be very disciplined, you're not good at consistency, and you YOLO into things, then you can get yourself into a lot of hot water. So, as far as strategies go, there's a plethora of strategies out there. You have to find what works for you. What works for me may not work for you, right? This is something I talk to my group about and my team all the time. Some of the things I do may not work for you. My strategy, maybe it doesn't work for you, but it works for me. And so we have to kind of break this down as a new trader, somebody coming fresh into the market. What makes sense to you? How do you see the market? How are you viewing the way the market moves? The price action, right? So there's a lot of different strategies here. Momentum trading, what does that look like? That is essentially going with the momentum of the market. You see the market moving down, you're taking a short position to the downside. You see the market moving up, you take a trade to the upside. Yes, there should be more confluences in place to get into a momentum trade, of course, but that's the basis of it. Breakout trading would be like a breakout of an area. Say you had an area of interest, it broke out of it, retested it, you're taking that breakout trade. Scalping small moves, I know a lot of people who do this, and then just following the market structure and trend. You could use all of these in conjunction to create a great strategy as well. It really depends on how you view the market and how you view price action. So, final tips for success. And we talked and touched on this a little bit, but staying disciplined, right? You have to have discipline when you are going to decide to become a day trader. If, like I said, if you do not have that, you will not be a profitable trader. Avoiding over trading, setting limits for yourself, understanding what you can and cannot do with trading, and really learning yourself is going to set you apart from all the other traders. Keep a journal. This one is very difficult. I've heard this from multiple people, including myself. I will be brutally honest and transparent here. Keeping a journal is it's just something that I found that doesn't work that well for me. What I will do is make videos and I will break down exactly what I did. If you find yourself not being able to sit down and write out what has transpired, why you just took a trade, maybe record yourself, maybe put it in your notes, talk text it, do a voice memo to yourself. Whatever works for you to remember what transpired, why you took the trade, and maybe why you got in, why you got out, how you felt during that trade. These are all good things to think about. And then trading during high volume hours. So those being, the market open. I'm Pacific Standard Time, so market open for me is 6:30 a.m. If you are Eastern Standard Time, of course, that is 9:30 a.m. at market open. And then focusing on your risk management. So, touching back, sorry, on the high volume, you can also trade Asian session and London session. I don't do a lot of Asian session, depending on what is happening in the market, or if I see that there is volume coming in, I potentially will trade Asian session, but typically I'm just a New York session trader. Okay, and then back to the risk management. If you do not have risk management, you again will not be profitable without putting that first. Have to know how much you can risk, how much you can tolerate as a trader, right? Everybody's risk management is going to be a little bit different because they start to learn themselves as a trader. It's taken me a little bit to understand this in the idea of teaching or mentoring or whatever you would, a tool, whatever you would like to be calling what I'm doing. Um, I've learned that everybody's a little bit different with what risk they can tolerate. So that is definitely a learning curve to see where you either don't make bad decisions or you handle loading up in contracts and holding trades and letting your trade play out. So, risk management. And then let's go over my typical trading day. So, I'm typically only trading the market open, like we just discussed. I'm sticking to my trading plan and my set of rules that I have created for myself. We will go into trading plans in another video. And then no over trading or revenge trading. This comes with time behind the screen. A lot of people will tell you that it's so easy to just walk away. It really is not. It's something that has to be learned. It is something that you have to experience. It's like, reading about the ocean. I've given this analogy to my team, reading about the ocean and then going and diving into the ocean, right? You're not going to know how the ocean feels and how the waves are moving you in and out and pulling you until you do it, right? Trading's the same way. So, getting in on these screens, realizing how that feels and stepping away. So that's something that's definitely learned to walk away with your win or your loss. And then remembering that there is always another trading day. So, okay, right here. Trading smart and managing your risk. So remember that in conclusion to all of this, this was very high level. Day trading futures requires discipline, your risk control, and consistency. It is definitely a rinse and repeat. It is showing up every day for yourself, change your life. And then disclaimer at the bottom, this is only for educational purposes at all. This is not considered financial advice, but if you guys got anything out of this video, drop it down in the comments. If you guys have questions about future videos or questions about anything I didn't answer, go ahead and leave that down in the comments too, and I will see you guys in the next video.